High mortgage rates have left U.S. home buyers in a lurch. Many have delayed buying because of the lending conditions and high home prices. But rates have been moving a little lower in the past couple of weeks. Karina Mitchell looks to see if that's enough to get people to start thinking about buying again.
After hitting a 23-year high of 8% in October, mortgage rates are starting to ease. The drop is providing only modest relief to discouraged homebuyers, however, who've been sidelined by sky-high rates and tight lending facilities. The average rate for a 30-year fixed mortgage, the most common residential loan option, has nearly tripled since January of 2021. With fewer homes for sale and home prices climbing to record highs, homeownership is now out of reach for many middle-class Americans.
For American households who are relying on mortgages to finance their house purchase, it's pretty much out of reach because the debt burden is enormous.
Mortgage rates have become so unsustainable that, according to a recent survey, 64% of potential home buyers say they'd be okay with a recession in the U.S. if it meant lower rates. However, Xu says while the current housing market is brutal for many, for those who can afford it and are willing to pay all cash, there are deals to be had due to a big drop in sales.
Back in 2022, beginning of 2022, the annual S&P Case-Shiller Home Price Index was growing at 20% a year. Now it's growing at 2% a year. So to the all-cash buyer, this is a great market.
As rates tick lower, she predicts more buyers could pour into the market, pushing housing prices even higher. According to a report from real estate firm Redfin, home hunters need to make about $115,000 to afford a median-price home in America. Highline Residential focuses on homes for sale and rent in the New York area. It says business has been brisk despite high mortgages, low inventory, and soaring prices.
Expectations were that the prices are going to go down, but that has not really happened. The market has remained stable as far as pricing is concerned. Where we've seen the dip is transaction volume, which means the number of buys and sells in the city.
For those currently in limbo on their quest for home ownership, Wadwani has some tips.
Date the rate, but marry the home. In other words, you can look around for best mortgage interest rates, not just stick with your particular lender. You can look to refinance for the future.
She also suggests making a list of home features that you consider essential. For example, if location is key, she says maybe consider buying a fixer-upper instead of a new construction. There will likely be less competition for homes that require extra effort and investment. Karina Mitchell, CGTN, New York.
Okay, for more about the U.S. Real estate market, Ken Johnson, a real estate economist, Associate Dean, Graduate Programs at College of Business, Florida Atlantic University, one of my favorite places to visit in Florida. You just heard from that last story, and I'm going to disagree with what we just heard. I don't understand why we're forcing everyone to buy homes. How many people actually need to buy homes or want to buy homes?
Well, basically, you have three choices, Phil. You can rent and not save or reinvest money put into homes, or you could rent and reinvest, or you could own and build equity. The last two actually work out to be about the same, but many people find it difficult to have that monastic discipline. So very often home ownership is seen as a way to build wealth.
or lose wealth. I mean, a buddy of mine just bought a place and he spent a ton of money buying it, and now he's spending a ton more money remodeling it, and he has nothing but regret. I mean, you say building wealth, it also serves as a horrific heavy backpack that you've got to carry around with you. You've got to fix the lights, you've got to fix the roof, you've got to fix the plumbing. I mean, it's all on you. It's also a massive liability as well, isn't it?
Well, when you look at the two options between renting and reinvesting and owning and building wealth, both create substantial amounts of wealth over time. Historically, Americans love to buy homes. However, there's the alternative option of renting and reinvesting, and those two do perform about the same, and it depends more on a lifestyle choice. However, the country is still a significant majority of individuals want, or families want to have home ownership, and that's going to not change in the near future.
Right. So that's fair. I mean, people want to own homes for stability or children or neighborhoods, whatever the reason might be. But right now we've got mortgage rates Anywhere between 7.5 and 7.75. Yes, they came back a little bit, but I would not be jumping up and down over a quarter of a point. I don't think it truly matters at all when it comes to buying a home. You're going to have to put 20 or 30 or 40% down. You're going to end making payments of somewhere between 5, 10, 15,000 a month. For the majority of Americans, this is simply unaffordable, especially when you look at major cities, where the average home price, when you say $1 million, nobody blinks anymore.
Well, our prices are up significantly because unlike last time around when we reached the peak of our cycle, there were way more properties available than more units than people to occupy. Now we're in just the opposite situation. We have this tremendous undersupply of units just at the moment in time when we have this huge surge in demand as we go into record levels of of household formation, migration into the Sunbelt states. So you see most of the appreciation going on in the Sunbelt states. However, this is not the first time we've been through these sort of things, but prices should level off, but we are going to face a period of unaffordable housing for quite a significant period of time.
What's the solution on that? A lot of people say, well, let's get these large public home builders to build more homes. There simply isn't the land. There isn't the will locally when it comes to regulation. And when we say build more homes, we don't mean build more homes in rural communities. We mean build more homes, say, in Washington, D.C. or New York. These are places that simply don't have the space for new home builds. What's going to be the solution?
Well, the solution, Bill, is to build. And I find that funny that you mentioned this because we hear this in Florida all the time. There is no more space. There's plenty of space here. What we will probably need to do is have a denser array of housing, and meaning we'll go more vertical. There's some opposition to that, absolutely. But in the end, it is building is the solution. This is not uncommon, though. We faced this many times in America after World War II, when many people migrated into the metropolitan areas for the first time. We just could not build fast enough to keep prices reasonable. People end up doubling, tripling up. You have multi-generational living, where you have grandparents, parents, and children living in the same unit. Odd roommate situations, the Golden Girls, the Odd Couple, those just weren't sitcoms. They depicted real life situations. This will pass. There will be a point in time in the near future where we will be back where we have a market that is under the long-term pricing trend. These things are cyclical. The magnitude of the cycles are what's become an issue these days.
There's also the business issue as well when it comes to, like, say, Airbnb or renting out your place by the day and pretending to be a hotel room. There's estimates that we're talking about millions and millions and millions of homes that are tied up in this sort of Airbnb short-term stay models. These homes in the past would have been either rented out to you and I or sold to you and I as a place to live, but now instead these individuals are using these homes to try to make more money, I guess, as an investment. That has had to have a pretty significant impact when it comes to supply, does it not?
Absolutely, and we're finding it hard to measure because it's hard to count, and this is all happening in real time. But the silver lining in the cloud are exactly these short-term rentals. When the U.S. hits a slowdown economically, you will see these units return to long-term rent, being a long-term rental, or back into the market for home ownership. There will be an expansion, a rather rapid expansion of supply, which we will see will help pricing, but this is not going to happen until we do see a slowdown in the economy. Typically, when you see a slowdown in the economy, you don't see an influx of supply. This will be different this time around, almost certainly.